Hello and welcome. You're with us here on Business Today. I'm Amha Bakaya. Here are the day's top stories. Aviation regulator cracks whip on SpiceJet. DGCA cuts SpiceJet departures by 50% for 8 weeks after multiple snags. Airfares expected to rise even as number of travellers surge. India's tryst with high-speed 5G mobile broadband a step closer to reality. Bumper auction sees bids worth 1.5 lakh crore rupees. Auction to continue tomorrow. Jio leads those bids for a big chunk of spectrum. Sensex rebounds after two-day break, ends 547 points higher. Nifty tops the 16,600 mark. Broader markets outperform, whereas the rupee weakens on the back of global dollar strength. The US Fed Reserve is widely expected to hike benchmark rates by 75 basis points for the second month in a row. Market analysts believe that Fed efforts to cool inflation through rate hike will most likely lead to a recession. Car maker Maruti reports a bumpy first quarter on the back of rising commodity prices and global chip shortage. Net profit falls short of estimates despite bigger than expected jump in revenue. Margin disappoints. Big warning from top Tech Mahindra honcho CP Gurnani tells Business Today TV in an exclusive chat that the Indian tech sector could be headed for a slowdown. Google Street View finally comes to India. Bengaluru to go live first, service to slowly roll out in Hyderabad and Kolkata, other cities to be included later. Even as the aviation industry is returning to normalcy after a crippling pandemic, the regulator, DGCA, has forced SpiceJet to cut its flight numbers. In an unprecedented action, the regulator has curtailed SpiceJet flight operations to 50% for the next 8 weeks. This follows inspection of the airline's aircraft and operations after multiple snags in a short period of time. SpiceJet had reported at least 8 technical malfunctions in 18 days. As many as 53 spot checks were conducted by the DGCA on 48 SpiceJet aircraft between the 9th and 13th of July. One of the big impacts of this move may be a rise in airfares, with less aircraft now available to handle the rising number of passengers. For more, I'm joined by my colleague Karishma Sudani. Karishma, take us through some of the implications here.
Well, safety concerns over India's budget airline SpiceJet has now started to worry consumers a lot, and this is especially after the fact that an interim order by DGCA has come in today that DGCA is now going to restrict operations of SpiceJet for its summer schedule for next 8 weeks by 50%, which means a cut down in 50% of its flight in the remaining summer schedule. Well, SpiceJet has also sent a statement to Business Today, and they say that they are in receipt of the DGCA order and they will act as per directions of the regulator. They also say that due to the current lean travel season, SpiceJet, like other airlines, has already rescheduled their flight operations. Hence, they do not see a major impact in their flight operations. They'd like to reassure the passengers that there will be no cancellation of flights and all the bookings will be in order. They have also taken cognizance of the safety issues that DGCA has identified and are looking to cooperate with the air regulator on this matter. Well, this is not the first time that the regulator had to question the airlines on the safety standards, and now, because there are new entrants in the aviation market, it looks like that they're getting way more serious and strict in order to maintain safety of the passengers. Thank you for that, Karishma. After 9 rounds of bids, 5G auction continues and will take place tomorrow as well, says Telecom Minister Ashwini Vaishnav. Bids worth 1,49,454 crore rupees put in at the end of the second day of bidding, with good demand for all spectrum bands across all regions of the country. Reliance Jio and Bharti Airtel lead bids for a big chunk of spectrum.
So far, at the end of the 9th round, we have grossed about 1,49,000 crore 1,49,454 crore. We have been able to successfully generate the confidence in the industry, the way Prime Minister Modi ji has reformed this sector and given a totally new life to this sector. Today, telecom sector is seen as a sunrise industry, and much of the legacy issues are behind us now.
As part of the package, BSNL will be given 4G spectrum to enable it to upgrade its network from the current 2G and 3G services. The company will also absorb Bharat Broadband Network Limited, giving it ownership of 5.67 lakh kilometers of optical fiber network across the country. Additionally, 33,000 crore dues of BSNL will be converted to equity, and an additional 33,000 crore rupees in bank debt will be paid off by floating sovereign bonds at a much lower interest rate.
Sir, I would like to start by asking you the package that has been given. Do you think it will show the signs of revival in the next 1 to 2 years?
Yes. So the 2019 package of 74,000 crore rupees, that package gave the first boost to BSNL, and today BSNL is already making operating profits. So with that as the background, today's comprehensive package approved by Honorable Prime Minister has addressed all the important issues that were plaguing BSNL. With this, BSNL will be able to provide better service to the far-flung areas, have a very good large network of 14 lakh kilometers of optical fiber, and its balance sheet also will be repaired. So net-net, the benefit will go to the far-flung areas, to the villages, to the areas where BSNL is a highly preferred mode of communication.
Markets snapped a two-day losing streak and made some cautious gains amid nervousness across global markets ahead of a key rate decision by the Fed. Sensex and Nifty rose nearly 1% today. Sensex jumped 547 points to end above 55,800. Nifty also gained 158 points to shut shop above 16,600. All sectoral indices ended in the green. Pharma stocks outperformed. Sun Pharma and Divi's Labs were among the top Nifty gainers. Other blue chip gainers included SBI, L&T and TCS. On the downside, Bharti Airtel remained under pressure, tracking 5G auctions. Bajaj Auto, HDFC Life, Kotak Mahindra Bank were the other laggards in trade today. Meanwhile, the rupee again dropped sharply against the dollar, closing at 79.9 versus the dollar. The currencies was under pressure ahead of the FOMC meet outcome. Asian Paints shares traded positive after the paint manufacturer announced impressive results for the April to June period. India's leader in the decorative paint segment saw strong consumer demand, catapulting its sales by more than 54%. Let's bring in Amit Singhal, MD and CEO Asian Paints, to decode these numbers. Amit, thanks for joining us. Take us through what led to the volume growth this quarter.
Yeah, first of all, thank you for inviting me on the channel. Overall, when we see the quarter of April-June, what we would say is that the consumer demand, both in the retail and the B2B segment, has been quite exceptional in terms of what we have been able to see. Overall, what we saw is that the smaller cities, despite the inflation, they have also batted quite well in terms of the overall growth which we got. And the metros, T1 and T2 cities have done even much better overall from the point of view of selling premium and luxury products, which has also improved our product mix overall to that extent. We have seen demand coming across with respect to even the repainting and the construction segment overall, along with our home decor, which is modular kitchens, bath, lighting, and the entire range of home decor also doing extremely well, along with the industrial sector, which is auto refinishes and auto OE, along with the general industrial products. So according to us, it's been all-round kind of a performance where consumer sentiment has been good. Overall, I think people have heaved a sigh of relief that COVID is finally over and there is general positivity around in the market.
All right, Amit, thanks so much for joining us and taking us through those very good set of numbers coming in from Asian Paints. Consumer Protection Regulator CCPA has come down strongly on e-commerce companies for unfair trade practices. Speaking exclusively to Business Today TV's Chetan Bhutani, the chairperson of CCPA, Nidhi Khare, said that e-commerce related complaints have increased 30 to 40% over the last 4-5 years. She also spoke on service charge issue and said that the Consumer Affairs Ministry has taken suo motu cognizance in the electric scooters fire incidents and have issued notices to the companies. Listen into a slice of that conversation.
What is next for companies like Naptol, Paytm, who have been using spurious products and spurious suppliers, to say so, not like verified by the government, not having an ISI mark, especially for a pressure cooker? Any other measures that you are undertaking to ensure consumer rights are protected and spurious quality products are not in the market anymore?
See, it is very important that spurious, counterfeit and unsafe products are not sold to the consumers, neither physically nor on any of the e-commerce platforms. So last year when we took out this countrywide campaign against pressure cookers and helmets without ISI mark, it actually got a lot of traction. We will now be including even more consumer say goods which are, you know, the general household goods, which also do not conform somehow to the
have you examined those products?
Yes. So in cases where some QCOs have been already issued, for example the immersion rod or the electrical geysers, microwaves and things like that, so we will also try to be now raising you know, the countrywide campaign with these products, and we'll try to see that no product for which the QCO has been you know, already notified, they should not be manufactured or sold in our country.
Last question, ma'am. Towards electric vehicle batteries, it's a very contentious issue. You've saw DRDO report you mentioned. What action have you taken till now, and what are the future course that you would be adopting to ensure that the loss of lives and loss of property is not happening, because that's the core of the CCPA?
So in this case we have taken a suo motu cognizance of the issue, because there was loss of life, there was serious injury, and to all the companies who have sold these vehicles, we have issued notices. We will give them a reasonable time for you know, laying their you know, side of the story. Since this is also being looked after by other departments and other regulatory authorities, we are also in collaboration with them, seeking their inputs, and then we'll take a comprehensive.
Are you in a position to issue notices and fine them appropriately, or what does the rule book say for such issues?
Under the rule, if there is an unfair trade practice, CCPA can order to recall goods.
Okay.
So that itself is a...
Basically same powers that the Minister of Road Transport and Highways has. Well, thank you so much, ma'am. Pleasure as always to speak to you. Thank you.
Google has finally launched Street View for their Maps app in India, and it's the first time that the tech giant has done so globally by completely tying up with local partners. The company says the feature will help improve traffic congestion and road safety in India. The Tech Today team caught up with Miriam Daniel, VP Google Maps Experiences. Here's what she had to say about the big launch.
My first question, after I heard the entire introduction to Google Maps Street View, which is the new feature they've rolled out, is it real time or is it already recorded and that is what the viewer gets to see?
It is not real time. So what it is street imagery is captured through our partners, Genesis and Tech Mahindra, and it comes into the systems, and we then, you know, make sure that it's of good quality, we extract the right information from it, and then we present it. So when somebody puts in an address or a place and you look at the Street View thumbnail, we show you the view. But it is as close to the real world that you can see, so it's an accurate representation of the world, but it's definitely not real time.
Which takes me to the next question. Is it going to be updated like every few months, every sometime? Because in a country like India, it's really not possible to go into each and every lane.
That's right.
It gets really tiny.
No, this is a very, very smart question. Usually in the rest of the world, it's sometimes updated every couple of years, every year. It really depends on how much area you want to cover, and we might prioritize places where things are changing rapidly as well. Some places don't change a lot, but some places, you know, roads change, construction happens, businesses come and go. So when we see that there's a lot of change, we might go and do that again.
So the sensors are mounted on atop a vehicle, and then the vehicle is going around. So
That's right.
areas where vehicles can't enter, like they're really tiny lanes.
Our partners are getting really creative.
Right.
They're actually mounting it on auto rickshaws. You can actually carry the camera with you on two-wheelers if you like. And I don't know if you followed Street View worldwide. There are people who backpack carrying these cameras into the remote parts of the world to get Street View as well. So it's really flexible. You know, we have these cameras, and as long as they're capturing it at a certain level of fidelity, we can accurately represent the world.
And now let's take a look at the women who've added bling to their wealth this year. Yes, we're talking about India's women billionaires. And topping the charts is Roshni Nadar Malhotra of HCL Technologies with a wealth of 84,330 crore rupees. She's followed by Nykaa founder Falguni Nair, who's overtaken Biocon chief Kiran Mazumdar-Shaw for the second spot. Nair's net worth surged by a massive 963% to touch 57,520 crore rupees. The wealth of Mazumdar-Shaw, who's ranked third, dropped by 21% to 29,030 crore rupees. The numbers coming up on your screen. Do send in your queries and we'll take a select few every week, answered by our global business editor, Udayan Mukherjee. So our first viewer query today then, let's kickstart that conversation. Our first query today from Gopinath Deshpande in Navi Mumbai, and he's got a question around Nykaa. Let's listen in.
Hello Udayan. Taken Nykaa stocks about 4 months back and accumulated 60 shares at an average price of 1600 rupees. Today it is about 1400 rupees. Should I hold this stock or accumulate more or exit from the stocks? Please advise.
Well, among the digital companies, I think Nykaa is about the best you can buy in the listed universe right now. I mean, it's a very good franchise in the beauty and personal care segment. Of course, the stock has corrected very significantly from its all-time high of 2400, but that's in keeping with the rest of the digital space. You're losing about 10-12% from your purchase price as well. Nykaa has flirted with 1200, 1250 in the past, but always found a way to bounce back. But if the global correction, particularly in the Nasdaq, were to deepen, is there any guarantee that Nykaa will also not go down to triple digits, which is below 1,000 rupees? I don't know for sure, because there is no great valuation support for any of these companies, including Nykaa. Nykaa is good, it's profitable, but you know, to value it on a PE multiple basis, I think even today the stock is trading at some 500 PE multiple. So, I mean, that is ridiculous. So, there is no metric with which you can value and say this is the price at which it has become very, very attractive. While volumes are growing very briskly in the BPC segment, Nykaa's EBITDA margins actually are no more than 6-7%. So at some point, the brands that they own themselves and don't trade, which is basically owned by other brands, their owned brands are today about 10-11% of their overall sales, and their margins are higher. So when we see much higher contribution to sales coming from their owned brands, that is when the profitability metrics will increase, and we might be get to a position where we can value Nykaa successfully on some kind of a profitability metric. Till then, you keep your fingers crossed and hope that the pedigree of the management and the quality of the franchise will ensure that the stock does not see very sharp downgrades even from here on. But hand on heart, I cannot say that if the global turmoil in the Nasdaq particularly were to intensify, you will not find Nykaa at even 1,000 rupees a share. It's quite possible. So be prepared for a volatile ride. You might choose to average at lower levels, but I don't think it's the kind of stock where you will get a lot of sleep at night with.
All right, we've got a query coming in from Kerala on Oil India. Let's listen in.
Hello, Mr. Udayan. Good evening. I have 300 plus stocks for Oil India and at the rate of 254 per share. Kindly advise me whether should I keep it or sell it off.
Well, it's difficult to say whether this is the exact right moment to be selling that company, but I'll tell you what I think about Oil India and other upstream PSU companies. In my book, they should not be part of the investable universe of any long-term investor. I mean, you saw what happened a few weeks ago with the windfall tax, and in one day, such a great percentage of the market cap of ONGC and Oil India was wiped off because of a decision taken by the government. And this is the sword which will always hang over the heads of some of these public sector oil companies. So in my book, there is just no point in talking about earnings per share growth, volume growth, P multiples, dividend yield on a company where overnight its fortunes can change because of some decision taken by the promoter of the company. So with that risk in mind, I would suggest that these are not companies which will create wealth for you over the longer term. They should not be in your investable horizon. And if you get a good exit price because of some reason like a jump in the price of crude or something like that, I think you're better off looking at other companies. I would not be advocating or recommending that you hold on to these kind of names. This is not a recommendation to sell that stock today. I cannot do that. I'm not a stockbroker. But I would hesitate to say that these are the great long-term investments for any investor's portfolio.
All right, D.V. Srinivasa Rao has written in from Chennai. Let's listen in. I think his query is on Amara Raja.
I have 300 shares of Amara Raja batteries bought at the rate of 925 rupees. Shall I average now or book loss or wait and watch?
It's going to be very painful, sir, to book a loss at this kind of level because you've lost so much of your purchase price. And of course, the stock has corrected because of all the problems that you're well aware of. I mean, there has been a significant problem with Amara Raja batteries on the OEM front, which is for the new vehicles from manufacturers directly, because autos have been in such a lull over the last couple of years that there has been no great pickup on the OEM front, and that's been hurting Amara Raja batteries quite significantly. And the other is, of course, the raw material prices, which have gone up significantly, and they have put considerable pressure on the margins of the company. So on both fronts, from a OEM volume point of view and from a margin point of view, they have got squeezed, which is the reason why the stock has done so badly. It's actually not a bad management. It's a kind of a leader in the battery space. And I think both the problems which have led to the undoing of the stock might actually be closer to the bottom than you think, because I think the raw material prices are now slowly beginning to level out, and therefore you will find that margins will stabilize, I hope, from next quarter onwards. And even the OEM problem, because companies were not seeing enough demand, auto companies, or they were stuck with semiconductor chip problems, those are beginning to address themselves, and I think it is just a matter of time before the OEM demand starts to pick up. So I think you're probably going through the worst time for Amara Raja batteries and towards the end of the pain for that company. To sell at this point in time, you might regret later on. So I would say if you've been patient all this while, it might make sense to hold on to a stock which is trading at historically low valuations of 10 and 11 PE. I've never seen Amara Raja trade at this kind of valuation. I'm not saying the stock will rebound immediately, but if my guess is right that the autos will slowly start to turn around, then I think you will get much better prices in Amara Raja over the next 6 to 12 months. So this is my guess, my hope, that Amara Raja probably is closer to the end of its painful period and maybe even closer to bottom in its stock price. So I would be reluctant to say that you should take such a big or book such a big loss on your purchase price.
All right, that's all the time we have on this edition of Ask Udayan. Thanks so much for joining us, and do stay tuned as we'll take more of your queries next week here on the show.